Hi folks, Lee Gettess here with the market sense for the week of October 18th, 2011, or at least whatever semblance of sense we can make out of it. The charts we use come from the Trade Navigator software by Gettess Financial Technologies, and the first chart we'll look at is a weekly bond chart here. We were talking about this being in a blow-off, and they've come down, made a little test, and broke down again, so it's possible that this is all she wrote, that the blow-off is over. It's also probably likely that they'll do some sort of retest, maybe only reach up into this area right here, not all the way back to the highs, but chances are they won't just dip right back down, although that's not out of the question. What they've done so far this week leaves the potential to go a little lower around 136.24 or up into this area at 141.16. It's also very possible that they could go all the way back up to the 144.12 area, but I don't know. I guess it depends on what happens in stocks. They could break down to the 134 area without ruining the chance for them to still go back and retest the high from there. And of course, the previous highs they broke out from are way back down here below 126. So just a tremendous amount of risk left in this market, regardless of which side you want to try to get on. There's just a ton of risk here. Now in stocks, we had this very wide swinging sideways pattern that lasted for several weeks here. And sideways patterns tend to get broken out of, but the wider the pattern, the more likely the first break is false. And that's exactly what we got down here when they took out these lows and then turned and rallied right back up. This move doesn't surprise me at all, although the intensity of it does. They've already rallied up and gotten above the previous highs in the congestion area, and I really thought that it'd take them about a month to do that. So I guess moves are just getting compressed here. Where they stand now, the next resistance is in the 1236 area. But I think they will probably eventually get up near, if not above, 1250. We've got this previous swing low that they broke down through, and the chances are that they should go back into that area, if not go back up above it. And there's even a chance they could get up as high as this area right in here, which is, let's call it 1320. I'm not sure how likely that is, but they could, and that would still leave them the chance to just roll over and play dead afterwards. Now, if they break down, get some sort of bad news out of Europe or something, and no longer hold this support, we could see them down to 1160 or even 1120. Again, I think that's unlikely. I think the most likely thing for them to do is to sort of distribute up here at these highs and keep trying to work higher, but certainly not with the intensity that they've shown for the last couple of weeks. Just a phenomenal move there. Doesn't look like much on the chart because the volatility's been so high, but to go from down in the 1070 area up into 1230 in just a couple weeks is just pretty amazing. I still believe this is a bear market and they'll be rolling over eventually, but for right now they look like they could still work a little bit higher. So that's what we've got for you today. I sure hope you can find something profitable to get yourself into. Thanks for checking in with us, and we'll see if we can make sense of this again next week, hopefully.